good morning, traders. And just a bit of housekeeping before we get into the market commentary. I think it's important to understand that we will be taking around 12 points out of our fair value at 4 o'clock this afternoon. So the index will drop by that amount, but obviously your account will be cash adjusted by the same amount or whatever your position size is there. So if you want more information around that, do reach out to the client managers. They'll be more than happy to fill you in about what this all means for your account and the index itself. But I think in terms of the overall market, I think we have been dealt with another flat lead from Wall Street. That's something we seem to be saying every day, such as low volatility we've got in the market at the moment. I think the session can be marked by twofold. One is the economic data we've been seeing in the US, and I think the first one is the industrial production numbers, which gained 1%. The industrial production numbers are about as hard as you can get within the hard data metrics, and that was certainly better than what the market was looking for. But building permits and housing starts a little bit worse than what was expected there. So, I think the net result has been a slight bid in the US fixed income curve. I think US 10-year has dropped about 1 basis point, which is neither here nor there. I think the other side of things is that we have seen more political controversies coming from Donald Trump, who has colluded some of the highly classified intel with the Russians, and that's going to have wide-ranging implications for the Americans and certainly the intel, the security forces within there. Clearly you can't be sharing classified information that you have from your allies with a non-ally such as Russia. I think these countries like Britain and Israel, certainly Israel, who are expected to be the country who has provided this information, this intel, the Dutch and the Australians and all these kind of big allies of America, will they think twice about parting information onto the Americans going forward? And it does seem that people like Sean Spicer in the PR department seem to be clearing up one mess, then going from one thing to another. But the market's not giving too much credence at it at the moment. People are very much continuing to keep an eye on what's happening with some of this political fallout. The sacking recently of James Comey on the FBI directorship there. But no one's really prepared to buy volatility or, buy fixed income or sell stocks on the back of this at any stage yet. But I think the interesting situation is if you look at the wash up and what we really took out of last night is there's been a fairly punchy dollar move overnight. The dollar index has broken through a number of key technical levels. We've seen euro dollar punching through 110. That's been helped by some strong ZEW confidence numbers. Obviously the stage was set on Sunday where we saw Angela Merkel poll her Christian Democrat Party polling very well in the state elections there, and that gives us some belief that she's going to do very well in the September 24th German federal elections. But euro dollar trading convincingly through the recent highs of just shy of 110, and that looks pretty good. Euro Aussie looks really good as well. Now focusing on today, what are we looking at? Well, the Aussie's certainly taking centre stage. We've got wage data coming out at 11:30. Remember, that's one of the trifectas of what the RBA looks at, because housing, wage data and employment are very much at the forefront of that. And so we're looking for 1.9% on the year-on-year wage growth, which is pretty dismal, to be honest, and that's certainly not going to give us any kind of belief that we're going to see any monetary policy changes. I think 1.7% or below on the wage data, and the Aussie goes down pretty hard. I think the implied probability of a rate cut will increase significantly. I think if we get above 2.1% on that wage data, Aussie dollar will have a nice rally there, and we'll probably see the implied probability of rate hikes increasing from around 3 basis points of tightening over the coming 12 months, perhaps up to about 7 or 8 basis points by the end of the session. Also keep an eye on Westpac consumer confidence numbers coming out at 10:30. They probably won't cause too much of a stir, but analysts do look at that number quite closely. We are expecting the energy sector coming under a little bit of pressure. We did see some fairly weak API inventory numbers coming out at 6:30. That caused oil prices to move a little bit lower. Obviously people are extrapolating what that could mean for tonight's Department of Energy inventory numbers. So if you're in oil, keep an eye at 10:30. We've got a big event risk coming through there. The market's looking for just over 2 million barrels draw in the oil inventories, and about 900,000 barrels of gasoline inventory draw as well. So there probably are some risks to those calls being so bullish on the drawdown, given what we've seen from the API numbers. So that's definitely something to be concerned about. But definitely keep an eye on the Aussie dollar today. BHP's ADR is up 1%, so that's indicative of a strong move in the mining space, really driven by some strong steel and iron ore futures overnight. They look like they've turned a tide and actually look like they could push a little bit higher here.